All right. I am more than excited to sit here and talk to Mick Rogers on this episode. Mick and I have had some great conversations in the past. He is definitely one innovator, thinks out of the side of the box. He also is the only one I know that in a room full of Laker fans said, go Boston. And he was brave enough to do that as a Laker fan. It hurts, but I respected it. But
yeah, I believe that was right after that victory that we had last spring. I can't really remember exactly what it was, but I think it was the World Championship. But yeah, that's about when it was. Yeah.
Yeah, I think that it beats our in-season little tournament victory that we had.
For sure.
Mick, no, I'm excited just to jump right into this. And please, it's been a pleasure to have you with ALKEME. So I just want to hear more of your backstory. Tell us how you got into the position you are now.
Andrew, I'm really excited to sort of share the story on this platform and really sort of be part of ALKEME at this point, right? I mean, you hear a little bit how we got here during this story, but like at the end of the day, really, I got to a point where I needed more of a national platform to tell our story, and really, I felt like that's what ALKEME could do in things like this, right? I'm an engineer by training, right? Graduated with a civil engineering degree, worked as a civil engineer, and circuitously got into the insurance industry almost by mistake, right? The more real answer is I got into the insurance industry through math, right? From engineering to math to the insurance industry as an underwriter, et cetera, right? And it really just sort of carried through. Worked at all of the, was a local Blue Cross underwriter, went to Gallagher Marsh, ran an office for Hayes here in Boston. But I knew that there was more that we could do for our clients. And I knew that I wouldn't be able to do that under a national umbrella of one of the large firms. So started on my own in 2008, and Axial Benefit was born. It really, is really born around the concept of a purchasing coalition for healthcare, right? How do we get a bunch of small and mid-sized clients to buy together, right? Which and get that economies of scale, right? And that reduction in cost and the stability of risk. All of that comes with intuitive sort of thought of like buying in bulk. But in healthcare, it sounds so easy, but with all the national and the state federal laws, it's a pretty high bar to get over, right?
Imagine.
I always knew that you could aggregate risk. They do it in the property casualty world all the time at a really successful level. And we started getting to a point where we had to figure it out, right? I had a few clients, 2009, 2010 timeframe where they were in the staffing industry. The staffing industry was really targeted, I think, in the original Affordable Care framework of making it very hard for them to stay in business and not offer coverage. So we knew that we needed to get them in a self-funded platform. We knew that we needed to get them up into an area where they could be measured on their own risk and just paying for what they use. But no traditional carrier would really take the risk. So we started exploring the captive idea. And again, captive in, we can talk about this as a whole different conversation, but captive right now is a significant buzzword in the employee benefits world. But in 2009, 2010, it didn't exist, right? We nobody was doing this. So we put our first 8 groups together as part of a captive program in 2010. That grew to our own pool, 2013. That grew to our own private captive in 2015. And then really the growth and the success of the program has gone from there, right? 2017, we got some really good national press. We were recognized as Advisor of the Year for the work that we were doing with the captive, with the reduction of cost. That led me to more speaking engagements. That led me to an engagement with a local client here in the prescription drug vending world that ended up being acquired by Amazon, which led us, I know it's all sort of built on that theory, right? And, we got an intro to the Amazon framework, which obviously can be somewhat intimidating. But at the time, they had come together with J.P. Morgan, and they created this entity with Amazon to fix healthcare. Right? They called it Haven. It was located here in Boston. We got this introduction from our client that got acquired, and they saw what we were doing in the captive space, but basically building our own pools, right? And wanted to know more about it, right? So we did a nice consulting project. We shared our data, we showed our results, we showed our process, how we bring people from fully insured through this dedicated process down. And they were engaged, right?
Wow.
They were excited about what we were doing. And it's one of those things that at the time I couldn't tell you what they were going to do, but I knew what they were going to do just by the questions that they were asking, right? And essentially what they wanted to do was build their own infrastructure within the healthcare system that they controlled every piece, right? And the insurance part, the risk part, was the piece that they hadn't really figured out yet. So we really, I think, helped show them a path on how to do it, right? So that obviously led us to more, speaking engagements and client engagements, and our program has just continued to grow since then, right? I mean, you look back at what Amazon has done, or any of the other technology vendors, right? And Apple's got a spin on it, and Alphabet's got a spin on it. They all want to come into healthcare. They all want to control, all their pieces. They're all going to be doing it by controlling their own pools, right? Their own, somehow it's going to be in some type of shape or form of a captive, right? They're going to put cost controls on it like we do, and they're going to build a better mousetrap. They're going to not only compete, but I believe they're going to put the current carriers, the current insurance companies, the Blue Crosses, the Cignas, the Aetnas, I think they're going to put them out of business. They're just not going to be able to compete because they're coming at it from a different way, right? So in that case, what we preach is be ready for it, right? Be ready for what's coming your way. And if you think we're going to be competing against the carriers in 5 years, 7 years from now, you're looking at the wrong target, right? It's like, I like to think about it like the auto industry, right? They're not looking to take out any of the suppliers. They're looking to take out, the Fords and the GMs, and they're looking at a higher level. They're looking to take out the carriers and replace them. I mean, and we see it now, right? I mean, I travel, how much I travel.
Oh yeah, absolutely.
Just scheduling this is hard, right?
Yeah.
I see it in other markets. When I travel to the Northwest, I see that Amazon is starting to offer healthcare to employers through a process like this, and because of the history that I know of how they've developed it, I know, what they're doing.
Yeah. Yeah. I, from one of your articles I was reading, you had a great quote where you discussed that you need to be ahead of the curve and you need to stop using buzzwords and start adding value.
Yeah.
I thought that was fantastic.
And I believe it, right? And we live it, right? I mean, we're not, look, if you're an employee benefits advisor, you can go to any conference and hear any buzzword or any new technique that will come in and out of vogue.
Yes.
But it may help. Yeah, it may help you sell, right?
Right.
But then once you catch that, what are you going to do with it, right? Because some of these are vapor, right? They're not real,
right?
But they created a good story. It's when you put the story together with the infrastructure and the history of success, that's when you can really scale, and that's when you can really sort of change your markets. I mean, I know you know this, but it's worth saying that our captive programs, our purchasing coalitions, which is what we brand them as, has been running a 3% trend for the last 8 years. That's outpaced any market in any in any geographic area in the United States. And our program is in all 50 states, right? And the way our program works, it's just, you know this, but, as the clients pay premium to the pool pays for the claims of theirs or any other participants in the pool. But at the end of the year, when there's money left over, and there's been money left over every year, it comes back to them as a pro rata share of what they put in. So we're not only holding the trend at 3.5% over the last 8 years, we're giving back 15, 18, 20% of the premiums at the same time, right? So it ladders. The successes ladder on itself. Every year we learn, we get better. Mm-hmm. Every year we see another proven cost control that we can add, that we can help our clients with. It's been as fun as the insurance industry can be.
Sure, yeah. And well, we've seen some fun outside of the industry when we're hanging out, but
yeah,
within the industry, yes. So, and I know, and Mick, this is what's exciting about these conversations, is I know we're going to have so many of these that we could pull out and really get into the weeds of these programs, and that's what I can't wait to do next time. Right now, what I just want to throw out there is just, if you're putting your fortune teller hat on right now, what are you predicting? What do you see for 2025?
Yeah, I think well, there's two things that I think are really, I think, colliding at the same time, right? I mean, I saw a couple really big studies from large East Coast private equity firms that think that are betting on a huge market shift from fully insured to some type of self-funding in the small and mid-sized market, right? And I think that they're betting big on that. We are betting big on that. We've seen it. Second thing that I see is a huge, almost land rush in the captive space, right? Everyone is, it's like an Oklahoma land rush. Everyone's trying to stake out their claim and say, hey, we have a captive. We're known as the captive folks, right? I mean, there's not a week that goes by that we're not getting a call from another MGU, another insurance company. Hey, we have a captive. We want you to check it out. They might not know we have our own private sort of version of it. And it's just, there's just a lot of them out there. The problem is a lot of them are set up to take advantage of the naivete of the employee benefits brokerage world, right? And I think, and I think a lot of brokers are putting their clients in situations that they won't see for a couple years, that the MGU or the person running the captive, the entity that's running the captive, are taking advantage of the system, right? They're taking their money first, and not a lot is going actually into the captive. But in the advisor's mind, they've never used the captive. Maybe they're not well versed in the self-funding world. They're doing something, right? It's just, it's going to run out of runway, and then they're going to be in trouble. I personally worry about the captive space and employee benefits in general, about a lot of advisors falling into this trap, getting tripped up, and then moving on, right? Like just saying, hey, tried that, didn't work.
Right.
Next shiny object.
And leaving a wake behind them.
Yeah. It's, I see a lot of it, and again, we're talking to other advisors all over the country almost every day. Third thing, I think, is a really, really big push towards transparency. And some of that is being forced upon us, right? The Consolidated Act of 2021 had provisions in there that they clarified last year, saying basically that everyone has the right to what's going on within their healthcare plan, right? They removed the gag laws, they increased the transparency requirements, they increased the requirement of a fiduciary responsibility, right? So every employer, as a sponsor of their employer healthcare plan, now has fiduciary responsibility to their employees, much like a 401k, right? We went through this, for those of us that are old enough to remember 2007, 2008, when the same thing was happening in the 401k world, it's happening now in the healthcare world, right? As a matter of fact, they used a lot of the same language to draft the laws. So that type of process, that type of decision making, that type of liability protection is going to exist and really come to a head as we move into 2025.
Wow. Yeah, no, that's a lot to take on, a lot to consider. And I know that we could unpack even more. So we're going to jump into some other episodes with you that we're going to really get into depth with each one of these. But, Mick, I mean, a wealth of knowledge. Really appreciate you being on with us today. I know people could gain a lot from this, and I'm looking forward to more conversations with you. So
Great.
Again, appreciate it.
Appreciate it as well. Thank you, Andrew.
All right. Thank you, Mick.